So while everyone else is frantically chasing the next 100x meme coin or watching their DeFi positions bleed to impermanent loss or asset loss, I've built a system that quietly generates 50% plus APR throughout multiple market conditions. And the difference is my portfolio is not a leaky bucket with holes. It's a wealth building machine that continues to flywheel its growth and continues to inject more capital on its own without having to pull money from my bank account. Here's the thing, right now we are in a cryptocurrency gold rush. Institutions are diving in. Large companies are adding ETFs to their balance sheet, as well as many retail investors are starting to flock into the crypto space. We saw this 4 years ago as well. Crypto is nearing an all-time high. Now, this is the gold rush that we are experiencing, but the best way to take advantage of a gold rush is not to go and join the competition and start to try to dig for gold, basically, like everybody and their mom is doing, but rather to actually sell shovels, so that way while other people are digging for gold, you are generating income and you are the facilitator. Now, despite cryptocurrency having an overall market cap of $3.4 trillion, that's a lot of money, right? There's this small industry known as decentralized finance that has a TVL of $155 billion. While still a large TVL in comparison to literally any amount of money that any of us here have today, this is still very, very small industry compared to its overall potential. The total addressable market for the DeFi industry is $3.4 trillion. Now, I'm not going to sit here and say that DeFi is going to hit $3.4 trillion this year, next year, or even the year after that. It's going to take over a decade for DeFi to get there, in my opinion. However, there's a lot of opportunity here right now because people are starting to move away from trading on centralized exchanges like Coinbase, Binance, and they're starting to use something called decentralized exchanges. And it's actually a fairly simple concept. You could see if I were to go purchase $10,000 of Bitcoin right now, not only am I going to pay a price of $108,989, which does include a 1% spread, I'm also going to pay a fee of $184 roughly just to execute this trade. So when we look at how much Bitcoin I actually get out, I get out 0.09006 Bitcoin. Now, if I were to go execute this exact trade over on a decentralized exchange, you'll see that I get out 0.0926 wrapped Bitcoin. So I get out not only more Bitcoin, but more dollars because I do not have to pay that super large fee. Here I am paying a $12 fee instead of $185 or so. And I also don't have a spread to execute this trade. And the best part is you can get this $10,000 of USDC onto the decentralized exchange to trade for free. You don't have to pay any fees to get this USDC onto a decentralized exchange. You could do it for completely free. And this wrapped Bitcoin right here is one-to-one interchangeable with actual Bitcoin. So it's not like it's some random asset and it's a scam over here. Wrapped Bitcoin is currently the 12th largest asset with a market cap of $13.9 billion. Once again, fully collateralized by actual Bitcoin. And to just go even further, as I mentioned, we are paying a price of $109,000 per Bitcoin, basically. However, Bitcoin is trading at $107,900. So you're paying an extra $1,100 or so just to be able to trade Bitcoin on a centralized exchange. And then you also have another $200 of fees on top of that. But with that being said, on top of all the fees that you're probably paying to do weekly dollar cost averages, monthly dollar cost averages, or even just inject capital when you see dips in the market, your crypto portfolio is probably bleeding right now. Ethereum is not as high of a price as it used to be. Solana is not as high of a price that it used to be. Maybe you are investing into this small DeFi industry with a TVL of $155 billion. You see high APRs, but your capital keeps shrinking and you keep losing money on your positions. And perhaps your solution is to find stuff that does a higher APR, dive in with a tighter range to generate even more yield, and ultimately that just causes you to lose money on every single rebalance and allocation simply because that's the completely wrong strategy to execute because you got it wrong in the first place. And the worst part is you're probably spending hours per week, if not per day, trying to manage these positions to make something work, but none of it truly is working. Now, in a couple days, I'm hosting a 3-day live virtual event where I'm going to reveal my complete system for generating reliable income in decentralized finance and consistently beat divergence loss without having to fear of being outperformed by hodling. I'm going to dive into the exact system that I use to help assist in over $50 million in DeFi deployments, how those deployments are doing 50 to 80% APR. We're going to dive into how you can actually implement amongst that framework, with a $50,000 portfolio deployment masterclass. And then of course, what to do after you get deployed, how to optimize your pools, and what data truly matters and what's just noise. Now this is a completely free event, and because of that, we do have to limit reservations because we're taking a huge risk by giving out all of this information for free. So if you guys do want to secure your spot, grab your free ticket. The link is going to be right below this video at the top of the description. But I want to dive a little bit deeper into the selling shovels mechanics basically. So while most people in crypto are trading on decentralized exchanges now, you can take advantage of the fact that they have to trade on decentralized exchanges. You see on Coinbase, on Binance, on other centralized exchanges, they have private market making. Either A, they will go and be a market maker themselves, or B, they will have large institutions with tens of millions of dollars of assets under management that will provide the liquidity and facilitate the other end of the trade. And they get paid a lot of money because they're charging absolutely absurd fees here. In this instance, $184 just for a $10,000 trade, where we could get a $12 fee over on a decentralized exchange on the same exact trade. Well, the thing is, we can participate in that using decentralized exchanges. Now, no, we are not going to get the equivalent of 2% fee on a trade. However, we can get an average of about 1/3% per trade, which adds up over time to APRs of 50 to 80%. For example, if we were to provide liquidity for Ethereum to USDC, it's a 53% APR. Ethereum and wrap Bitcoin, that's a 73% APR. If we were to dive into some other assets, like something a little bit more volatile, Render, this is a 79% APR. And then this pool over here, which isn't going to be as consistent, but it's doing well over 200% APR. Chainlink paired with USDC is doing a 57% APR. And I can go on and on and on down this list. Truth be told, there are literally thousands of liquidity pools out there. Metrics Finance is currently tracking nearly 4.3K. And it's pretty easy to get caught up in the noise and dive into ones that you probably shouldn't dive into, ended up losing money. And we do still have exposure to the market in these liquidity pools, don't get me wrong. For an Ethereum to USDC, price goes up, we're witnessing those price rises, right? But if the price goes down, we're witnessing those price losses. So again, a lot of people dive into the wrong liquidity pools, price losses overtake their yield, and of course they're in assets that they don't believe in, so they end up selling at a loss, and it's just a constant cycle of chasing their tail and running around in circles to the point where they eventually give up because they think this industry is a scam or isn't working. And it's just because they have the wrong strategy. They're chasing their tail. They're diving into stuff that they don't believe in. Whereas if they dive into stuff that they believe in, they focus on the blue chips like Ethereum, wrap Bitcoin, they can get a very, very good and very, very consistent yield. It won't be a 250% APR like most people want. It will be a steady 50% APR, but something that gives you full market appreciation. So that way, when Bitcoin starts to go to $120, $130, maybe even $140,000, you're seeing those price rises. When Ethereum starts to go 2-3x from where it's currently at, because it's at $2,500, right? You're going to see that 2 to 3x on top of all the yield that you generate, or the income from the shovels that you are selling, I should say. Now, how exactly does this work? Well, basically, people are buying and selling you assets. So if we were to head into Ethereum USDC, as the price of Ethereum goes up to, let's just say, $2,750, just a little bit, right? We started with 0.17 Ethereum and 559 USDC. Now we have roughly 0.097 Ethereum and 765 USDC. A little bit less Ethereum, a little bit more USDC. Why? Because people bought the Ethereum off of us and they gave us USDC in return, which means that as the prices are moving up, you're actually selling your assets, leaving other people with the short end of the stick, because ultimately the prices are going to peak, causing you to be the one that's holding the money in the end. They're going to be the ones that round trip this cycle while you're over here holding USDC that you sold at the top of the market. And if you don't think we're at the top of the market quite yet, you can provide liquidity for assets like Ethereum to wrap Bitcoin, because these things are correlated, right? They move up and down together, which means that you're going to be taking on a little bit more Bitcoin, a little bit more Ethereum, right? You're going to be going back and forth between the two, but ultimately you will still have the upside basically, because these things go up and down together. So if you guys want to learn how you can sell shovels yourself and dive into liquidity provision and take advantage of this $155 billion industry, make sure to drop a like, subscribe, notifications turned on, and I want to see you at my 3-day live event next week. I'll see you guys next video. Peace out.